Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today's agenda, we'll go through our market update and the earnings trades, and yeah, Joe's got some few things to show. So that's what we're going to do. We'll get started. Okay, overall, all the indices are in 2 at this point. Had a big shift down in market pulse. So now we're actually below 30. So below 30 is kind of like our oversold indicator on the big pie here. So technically we are now oversold. We'll go through the individual indices, but you see here, we got up in.
You're breaking up, Josh.
You hear me? How about now, Joe? Can you hear me?
I can. You're okay. Winslow
Okay.
here.
Okay. All right. So we are up in the upper 70s here, and Joe can't hear me. Winslow could hear me. Not sure what to do with that. Might be my internet connection. Anyone else? Can you guys hear me?
Yeah, that's just Russ. I can hear you.
Okay.
You just came back.
Okay. Yeah, not sure. Must be my internet service provider. Anyway, so green pie, obviously we were in upper 70s and it's been pretty much straight down. Now we're below 30. So 30s are oversold indicator. So technically we're oversold now. So really what we want to look for is, is green pie pretty much like starting to level out, because you can see a lot of the time here, these things level out, especially like down here. Then, we'll get to turn back up. Obviously, things were in state 1 for a long time and, dropped into 2. So, if it's going to be bullish, we're going back 1. So, we'll look at the key levels. One kind of encouraging note, obviously nothing big, and like we were seeing in the past for these new lows. So we got up to 176. That's nothing from kind of what we were seeing. So that is encouraging. We had all these new highs here showing good numbers, and this rollover, just not much in the lows. So it's looking a little, looking like it wants to become a bullish, more, go back to a bullish market. So, obviously we'll keep monitoring the SMAs, pretty much mirrors the market pulse. So it's not sure how useful it is. So we'll look at the individual states here. So had a good cross. We got 36% in state 8s. You can see the 2s obviously climbed up here, and they've been pretty much plateauing past few days. So what we really have to keep our eye on is the 4s. So if the 2s go to 4, that could be a bigger correction. So obviously all the 7s went to 8. And those are kind of like the beat down stocks that haven't turned around. But for the rest of the market, really just kind of watching 2 start turning back lower, and the 4s don't convert, and that pretty much means the dip's over. So we'll have to see, but it's looking like it wants to be a 1-2-1-2. So, that was at state one, really long. Joe did a lot of analytics on that. So, we went into state two on Wednesday. We had talked a lot about that 50-day, and if that broke, we kind of expect like another 100 points down, and it pretty much did another 100. So if you recall, that target 3 that it bounced off of was right here. So that 43.30, which is kind of where I got that 100-point drop. So you can see we basically went right back down to that target 3 from this previous state one. And, it bounced off of that pretty good. So, as far as the state 2, we did meet the first target, barely. So we're back up in this range of the entry price. So, typically you go like this. So, breaking above this entry price would be very bullish at this point. So if not, then, kind of run down into, that same type of range, 43 something. But, looks like it's, could give it a run up to 1. So, just kind of look at this, this 4,400. I think what's more important, right above that is the 50-day. So let me pull this out a little better. Yeah, so 50-day is at 44.23. So, this is 44.04. So a little above that is more important at 50-day. So right now, this is going to be resistance level, that 50-day, as it comes up through there. So getting above that is very bullish. Obviously we dipped down. This was that target 3 level. That pretty much, from over, I think it's right in here, this price. Yeah, that was that target 3 area. So, if we fail, then obviously, we'll make another run down, but getting above that 50-day. But at that point, we'd look for this in between these target 1 and target 2 and 3, which is the average move, somewhere above 43. But, big picture wise, we're still in our 42 to 46 range, pretty much square in the middle of that. So that's it for SPX. I think let me see where we're at real quick. 44.33. So right above it. So we hold above that. So that's very bullish. We get right back above that. Very bullish. Okay, same kind of chart for Russell here. This one hit target 2. These don't last a long time. So, another 3 days on average. The same thing with SPX, it's like 8 days on average. We have seen some that, stayed in there a long time, but typically it's a short, especially in bullish markets, it's a few days in there, you'll get a little dip and then you'll bounce off one of these kind of targets down below. So, this one hit 2. So it's, same type of thing on the resistance on the way up, 1871. We're right on that right now. So, getting above that entry price is important. On the chart, obviously, this 200-day showed really good support here. So you can see, it's just like a straight beeline down up until last Friday. So as soon as it hit that level, which is 1842, it bounced off pretty good. next few days is holding right above it. And obviously today we're up on that. So, this, when you see it showing support, then it becomes even more important. So this 200 would be, that level that we looked for on the Russell. So once it gets above, you have this 50-day, it's right at 1900. So, if it's going to make another run up, we'd be going up to 1900 here. So once again, it did another. So that's our range, 1917. So, the 1900s has been really tricky. We showed you last week and a few weeks before that. This is the third time it broke above that 1900 range, and that goes back a long time. Let me pull it back. So pretty much, this is like May. We really dropped into this range of 2022, so a year and 3 months with a couple false breakouts up and below. But so this was the third one. These are all lower highs. If it follows a lot of these patterns, just something to be leery of. These other two breakouts, kind of found a little support and then just rolled over down to 17. This one, kind of tried to hold up and then just went straight down to 17 again. So, if we, I think, be kind of critical, does that SPX get above that 50-day and hold? Can this break above 19 again? Is this 50-day going to hold? Those are kind of key levels I'd be watching right now. But it, overall market pulse is oversold. So, to see if, those numbers, hold down here and start turning back up. Obviously, that'd be, very bullish overall. So I think that's it. 10-year went crazy. Let's pull that up real quick. So we made new 52-week highs, barely. The previous one was 4,333. So this one got up to 4,362. Obviously a little below that today, but higher rates are net negative for the market. So keep your eye on that. This thing keeps going up, that'll be bad for stocks. I think that 4 or 5 kind of thresholds real bad, where things get ugly. So, we'll keep our eye on that also. Fed meeting, pretty much the same as last week, maybe a little less of a hike, not much change overall. So we're a month out on that meeting. Balance sheet looks like it had a drop, but it's not giving me the readout here. But they continue to tighten, which is overall net negative for the market. So, and then I just want to pull up these rates. And you can see this is from a year ago, the blue line below. So the 10-year was pretty much 3%. Now we're 4.4 kind of range. So all of these have gone up quite a bit over the last year. Still very inverted curve. The 2 to 10 difference, it's a 505, so like 0.7. So it's kind of closed the gap a little bit more. This was 1, a few weeks ago, the difference 1%. So it's closing a little bit, but I don't think it's gonna become a normal yield curve in the near future. So I'd expect this to we'll have to see, but I'd expect this to go a little higher. So I think that's it overall for the market. We'll open up to questions, comments? Nothing? Yeah. Wrong one. No, it's not working. No one? Okay. I'll run through earnings real quick.
Hey, Josh, can you hear me?
Yeah,
Hey, just gonna throw this out there. This is Dan here.
yeah,
I
Dan.
was watching some of these news clips about the BRIC nations. I guess you're supposed to announce this week a new currency.
Yeah,
It's going to be backed by gold or partially backed by gold, and the economic warfare that's going to create on the attack on the dollar. And then, they're advertising it as the BRIC currency. But from what I've been hearing is a lot of even the European countries, our allies, are looking at the impact that weaponizing the dollar in the form of sanctions against countries gave them a sour taste in their mouth, because they said that could happen to them if the conditions were such that we would decide to do that.
mhm.
But regarding the new BRIC currency that's supposed to be announced this week, I heard there's 40 other countries that are looking to get in on that.
Yeah, I've heard
I don't
similar.
think, if that happens, I don't think that's going to bode well for the markets. What's your opinion on that?
I mean, I think it depends on how widespread it gets, right? So, I mean, if it's Russia, some African countries, and I don't see it a big deal, at least initially. But I didn't see the exact list of all of them, but I think it would be a net positive for gold. As far as the dollar getting dethroned, I think that's a lot harder than just, we're declaring. I think it would be a real slow creep. And then, at some point, like if Europe flips and Japan, and, that would be kind of a big inflection point. But I think initially, I don't think it's just gonna, you might get some gold bump, but I don't think it'll affect things too soon. I think you'd have to get wide adoption throughout, the world, especially, like the big economies. I'm not sure where China stands on it. They control their own currency very tightly, so I'm not sure where they stand on it. That would obviously be a big thing, like China, the big economies transitioning into that would be a big thing, but I don't see that right now, where, the EU is going to do anything. Japan, I think that's kind of the key would be, other like big countries getting into that. But as far as I think it's a net positive for the world, like go back to sound money, but I don't, it'd be difficult.
Yeah, the pundits I've been listening to, they feel that there's not going to be an immediate impact, but over time it could really have a deep impact on us, especially if more and more countries, jump on the bandwagon.
Yeah, definitely. I mean, if dollars stop being used, I mean, how many dollars are out there? Trillion.
Yeah,
Trillion,
because
and the
it used
same
to
with
be,
the debt too. Like the debt. If foreign companies stop buying all our debt,
yeah,
and they drive up, the yields, and
yeah,
I
between
mean,
them not buying our debt and used to be you could only buy oil on with US dollars, and now they're selling it in rupees, yuan, you know.
Mhm.
That's displacing the dollar worldwide as well.
Yeah, I mean, but the dollar relatively is, I mean, it had a huge run up and it's still strong. I mean, overall,
Yeah.
we had that huge run up. I mean, it's still up there,
Yeah, I'm keeping a close eye on that.
Mhm.
Uh, That
Yeah,
and gold. So,
yeah. I mean, I think initially it'd just be okay. How's, I think the initial reaction would just see how the metals, react to that. But other than that, I just keep my ear out for, big economies, like talking about moving over, or utilizing that. I mean, the US would probably be one of the last ones. They like to control the money, which is, why I'm not a big fan of those cryptos. I don't see them giving up control of, the dollar and all that. So, like India, China, bigger countries starting to, that kind of chatter could cause a lot of waves. But initially, I don't, we'll have to see how it gets adopted. It's a good question, Dan. Joe, did you have any thoughts on that?
Nothing to add really, Dan or Josh, just, agree with that opinion that it's going to take time, to see whether any of the big countries, really get involved. So no, nothing really to add.
Yeah, I mean, even like oil being traded, the dollar's still like pretty strong, but people using other currencies. So it's hard to, I mean, if the big economies don't adopt it, then I don't think it's a big deal to us initially. So anyway, we'll see. So earnings trades, we had a bearish pre-runner. This one's worked timed out pretty well. We had a kind of big block of bearish trades. So this one came through at Best Buy, closed out, hit a nice profit target. So that's one. The other bearish runners had quite a few of those pop and close out. So you're pretty decent money here. These are obviously like $1,000 trades. So, we've got 4 open, 3 of them up right now. Then we got 6 that closed out. That all, hit the profit target. So, quite a few. So it's been pretty good there. We didn't have the great bullish pre-runner this quarter, but the non-movers were good. The vol rise hasn't been good. And then the only other one's a bullish pre-runner. So you're still up there. You got 2 active trades that those are down. So it's winding down. Not too many trades left. So should be an overall pretty good quarter. Severe's not on here. He trades these actively, but overall should be pretty good quarter. And we got a couple of weeks till we roll out the next one. So any questions on the earnings? Yeah. Okay. Well, guys are a little quiet today. I'll turn over to Joe, see if he can get you guys talking more. You ready, Joe?
All right. Yes, sir, Josh. Let me share the screen here. Got a couple charts to talk about. Hi, everybody. Actually, I think we both had our head down a lot of today, Josh. Pretty surprised that the markets are up as much as they are. I mean, it's a pretty strong day. So, my sense is the lows are in for this correction, and that's what I want to speak to today. Really about the correction. I will start with NDX, and I want to start with NDX and go back to XLK which I talked about a lot last week in terms of potential leadership. Both the XLK and the NDX topped, almost 2 weeks before SPX and then Russell. So it was the 19th of July where NDX and XLK topped. And basically it was the 18th of August, where the lows would come in. It always does, kind of amaze me, with Shook and his numbers, that, we get down to target 3 here in NDX. They're short-term little percentage moves because we're in state 2, but pretty impressive. And so talking about NDX, from that July 19th high to the August 18th low, we had an 8.5% correction from high to low. All right. So that's why I think that a day like today, boom, we're off to the races again. And I'll speak to one other reason as to why I think that may be as well. XLK, let me just pull back. There's a little longer picture of NDX. The retracements I'm working off of, we talked about them a little bit last week, are really this April period. I mean, you go back to the March 13th for sure, but it was kind of this April 25, 26, and then there was a double bottom in Russell. I'll pull that up later on May 4th. Same thing with SPX. And, basically we got, we got between a 3/8 and a 50% retracement coming off of this low, on August 18th. So 8.5% between 3/8 and 50% retracement, and it seems like we're going to get going again. Let me see what's the other thing. Average days, we're a little bit shy here in NDX, but we'll see over the next couple of days whether this thing gets back into state 1. Here is XLK, and we're right at average days here, 10 and 10. And again, the XLK move to the downside was 10% off of the high. I went back and looked at XLK was in state 1 for a heck of a long time. I think it was 100, maybe 134 days. What surprised me in some research, that's not that unusual. So you had to go back to, I think it was 2020 and 2021 and then 2017. XLK stayed in state 1s for well over 100 days. So not that unusual. We get the 10% correction. I mean, again, with today's move, it would surprise me if we're going to break the August 18th lows anytime soon. I think the catalyst, and we'll know after today's close whether we're going to get the next leg here. Everybody's talking about NVIDIA earnings. We know that. This is what they're looking for. You may already know. Expected revenue is $11.1 billion in expected revenue. A year ago, same quarter, they came in at $6.7 billion in revenues. So a monster increase is what the market's looking for. Earnings per share, you'd expect, the same kind of huge increase. That's even greater. A year ago, NVIDIA offered 51 cents in earnings. Basically, from what I read a couple weeks before this quarter's announcement a year ago, they came out and said something about, some soft demand for game chips. The expectations on the street a year ago were $1.25, for the quarter, and they committed 51 cents. Tonight they're looking for $2.07. So, I think all hands on deck. You can see the last 2 quarters, we don't pull up, some of our background pages too much, but you can see the last couple quarters, we know last quarter, NVIDIA actually, wildly exploded after the earnings announcement, and even the previous quarter as well. It was a year ago that the comparisons really don't work out at all, but you know, we'll know shortly after 4 o'clock, kind of how things are. What really strikes me about, you know, the NVIDIA chart is, yeah, you know, we went to state 2 for a couple days and we're back into state 1. So it's going to be awful interesting to see, you know, the reaction to what the news is on NVIDIA, you know, after the close tonight. Let's see. So that's kind of, you know, we're looking for leadership. You know, is NDX and XLK leading us down? Wouldn't be surprised if they're going to lead us right back up as well. So that's that. SPX, you know, from a retracement standpoint, okay, so NVIDIA and XLK was a July 19th high. It was July 27th when SPX topped out. Its correction since then has been the softest of the indexes at only 6%. From a retracement standpoint, we got to almost 50% coming off of, you know, this May low. So you know, solid, and the lows were, I guess, 43.28, which was you know, right about 50% from the May low. And again, the shallowest of the corrections at just 6%, but you know, lo and behold, as Josh pointed out earlier, you know, we get down to some of these targets, and there we were, August 18th. All the indexes get down to targets, and you know, we've been lifting a little bit since. Russell, the pullback in Russell, you know, was similar to NDX at 8.5%. You know, it was the last to top July 21st. And, you know, the pullback here, you can see, has been pretty meaningful from this sort, or this is the, I think, May 5th bottom in here. Yeah, or May 4th bottom. You know, you basically got a 50% retracement and not too far from a 5/8 retracement. You know, the low here was 1830, 5/8 retracement would have been 1815. So, you know, as Josh has been talking for, what's it been, you know, a year and a half, you know, Russell just in this 1719 range, we got up to 2003 at one point, but, you know, we didn't stay above that long at all. So, you know, the money's being made in other areas for sure. Russell, you know, certainly just kind of lagging behind. Let me go back to the home page quickly, just, you know, in terms of our sector overview. Only, you know, 2 of the charts are bullish, the energy sector and then the healthcare sector. So I thought I'd just give you a look at both of those charts. Here is energy. You know, there may be something to talk about in energy, you know, pretty, you know, no real dynamics to the market, but, you know, pretty healthy higher lows. So, you know, when it comes to inflation, all that, certainly be worth watching. Here's the USO index that we do track. You know, just kind of gave us a state 1 after, you know, some fairly bearish states for a period of time. So I think maybe this is really the one to watch, just to see whether or not, you know, we can get through the 75 level. You know, since we're in a state 1, I really, you know, not sure how good of a state modeling instrument this is. We get 14 days in it so far. The average is 33. So, but yeah, we don't talk about this too often. Might be worth watching over the next week or 2. And lastly, your healthcare, you know, there's the index. Not a whole lot there. You know, from my perspective, we've been rolling around in state 1. You know, if we can get through the recent highs in the 135, 136 range, or maybe something to talk about. But, you know, for now, it's just kind of laying around in a lazy state 1. So, yeah, I would think, you know, NVIDIA is going to tell the direction of the markets after tonight's announcement. And again, those expectations are 11.1 billion in revenues, $2.07 in earnings, and bring it on. See what happens. Obviously, we've got, Jackson Hole. I think that starts tomorrow, right, Josh? I think tomorrow through Sunday. Powell's got a speech Friday morning. So from a numbers perspective, not a whole lot, I don't think. We get durable goods tomorrow, and then some housing numbers next Tuesday. Inflation numbers, we don't really get any till next Thursday when the PCE numbers come out. So that may give the market a chance to move a little bit too. So happy to take any questions, but that's what I want to just kind of point out today, Josh and everybody.
Yeah.
Joe, Dan here. Can you hear me?
I can, Dan. Hello.
Okay, wonderful. Yeah, regarding NVIDIA, one of the things that I saw was that their computer market is, they've been losing a lot of money on the PC market. Obviously, they're one of the aces for AI, and everything is heading in that direction. So I think it'd be interesting in their forward guidance if they mention the PC market. They're, from my understanding, the place that they are excelling is gaming. That's not going away anytime soon, and their chips are going to be in demand for that. But everything is going to cloud computing, and that's what's taken an effect on the PC market for a whole bunch of companies, AMD and Intel, all those. So I say the forward guidance on the PC market be an interesting comment if they have any, they address it.
Yeah, I agree with you, Dan. One thing I found just going back and doing a little homework was I guess a year ago when their earnings just terribly disappointed 2 weeks in advance of that, as I mentioned, they had kind of commented on soft demand for the gaming chips. I also read that just within the last couple weeks, and these revenue expectations going from 6.7 bill to 11.1, it's a monster increase. Well, in the last couple weeks, basically somewhere they came out with guidance, that somewhere, I don't know whether we're talking 10.8 to 11.3, somewhere in that neck of the woods for revenue. So it doesn't look like they'll disappoint, even though that's in the neighborhood of a 65% revenue increase. But the PC market, it'll be interesting to see if they talk about that.
Yeah. Oh, that'd be interesting.
This is Dave.
Yeah,
I can
and
comment a little bit about that.
Yeah, please, Dave.
To the PC kind of comments that both Dan and Joe just made, you got to kind of go back to the start of the pandemic, which is where the gamers all drove up the GPUs and off rigs on their desktop that made higher performance, because it kept all the performance right there on your laptop. So during the pandemic, that's what drove up all the GPUs that were used in, let's say, personal or laptop, environments. And that's what the sell-off or the retracement, when it came way down, is why they sold off. They saw that they were going to sell to the gamers during the pandemic, when the pandemic has ended, so to speak. So then the conversation switched to the cloud, like you're mentioning, and all these AI applications that are driven only in the cloud, not on an edge device like your phone or your laptop or your desktop if you have a desktop. So that's what drove up the hype in the last, say, quarter or so, when AI was driving up the NASDAQ and the S&P for everybody that said they had AI kind of stuff. So now and I agree with just what Dan said. I totally believe that NVIDIA sold every GPU they could make to date. The question is, how many are they going to sell in the future against the hype that's been created already. So we probably even won't know after, a week or two. We'll have to like wait to see a little bit in the future, but the guidance will be really important. If they're really optimistic and their guidance is higher, then I assume the stock will go higher. If the guidance is, well, we have to wait and see, kind of like what Microsoft said at their last earnings report, that we're not going to see immediate earnings growth to all the AI hype that all the AI hypers were using. So we'll see. What was I going to say? Oh, so that's the way I differentiate the desktop and the cloud kind of AI applications and their importance to NVIDIA. It's also kind of important that I follow if you've noticed that if AI is taken off like everybody says it is, there should have already been a huge uptake in memory. And the memory guys, there's not that many of them, and they're not reporting a great uptake in the sale of their memory products. As a matter of fact, they've all pretty much reduced their guidance for the next quarter. That would be Samsung and Micron and SK. So if they're not selling today a lot of memory, then they're not really, and the cloud isn't using a lot of AI today. The question is, what is AI going to be in the future? And we've had this discussion before a little bit too, in this and other forms is, well, how much of that's hype and how much of it is just fancy programming with faster computers on bigger data sets versus what is AI and what it isn't. So anyway, that's my perspective on NVIDIA. We'll see. I certainly am not making any plays on NVIDIA ahead of time. If I had shares in NVIDIA, I would certainly be thinking about collaring those gains right now going into the earnings report, because the downside risk is bigger than the upside risk, if you ask me. Just on that.
Typical of Wall Street. Some of the houses are talking $650, $750 price target for NVIDIA, but I don't think they were there 90 days ago. But it's typical Wall Street.
Well, the analysts on Wall Street are just momentum analyzers. I mean, they have their formulas that they like, and they just plug in new numbers compared to what they, what they're guessing at.
Yep.
So,
Exactly.
So we'll see.
But Dan,
Sorry.
Thanks for the comment and question. Thank you, Dave.
Oh, I do have one more question, actually, for both Josh and Joe here. It's sort of a how you an impact feeling kind of question. With Jackson Hole being Friday, we'll see what Friday brings and what Friday brings. But let's just make the assumption that the Fed isn't going to be benevolently dovish on whatever they announce, and they're either going to just hold the line or wait to hold the line on future data like they've been doing. But let's just say, for argument's sake, that we will have most likely higher interest rates for longer. My question is, if that ends up being the case, will that be more of a headwind for the SPX, for the NASDAQ, for the Russell? I'll tell you what I think, but I don't want to bias what you're saying.
Good question. I would say more of a headwind for the Russell first, probably SPX second, and the NASDAQ third.
Yeah, okay. I think that way too on the Russell, just because we have a lot of domestic, lower cap companies in the Russell, and inflation hits them harder, I think, than the big internationals in the S&P 500. And the S&P 500 right now is really looking at the dollar at one of its highest levels ever. So if the dollar ends up coming down at all, it won't be a headwind for the S&P 500. It'll actually probably be better for them. Now, the NASDAQ is the other one that I'm not too sure. You know, I would go Russell, NASDAQ, and then SPX as far as how inflation is going to negatively impact those three myself. But then anyway, that's my thought is that, you know, a lot of these newer onshoring manufacturing companies that are trying to onshore now, well, inflation is high and interest rates are high. It's going to hurt them more than incumbent energy producers, for example. My feelings and thoughts. So we'll see what we see, but
Yeah, I think of it more like company specific, like people that the cost of capital, people that need or use revolving credit, they're going to be hit hard, or or people that need to re-up loans or roll their loans, stuff like that. I think they're going to be hit pretty hard. And then the companies that have pricing power, they can keep up with inflation, without really hurting their business, like General Mills, like they own all the cereal or whatever, and the prices go up and people are either going to pay it or not, and they're probably going to pay it. So I kind of think of it like that. Who needs lending and who has pricing power, if they're going to keep these rates up longer. Like builders, companies like builders are going to they're going to have to offer a lot of incentives, for housing prices are high, rates are high, people just can't afford, like they were back when rates were low. So, they're going to have to do incentives. So, their pricing power is, going to be a problem. So that's how I think about it.
yeah, thanks.
Mhm. Okay. Good questions, Dave, Dan. Anyone else? Questions, comments before we wrap it up?
Hey, Josh, one thing I didn't mention,
Yeah.
that maybe we can get into a little bit in the weeks ahead, but, the state transitions, keeping track of, like the state twos and eights. Josh talks about this frequently, but, over the past month, as we dipped into that correction, those state transactions or transitions, were significant. As we know, we went from 77% in the pie to 29% in 17 days. So, that speed, the speed of the pie, is reflected in in the state transitions. And, maybe sometime in the next few weeks, we can start to put together some ideas, overbought and oversold levels just in terms of state transitions. But, we had a few days where, we were triple digits in both state twos and state eights, which, spoke to the correction we were in. So it's something else to analyze going forward.
Okay. Well, if there's nothing else, we'll wrap it up. Thank you all for attending. Do it again next week.
Thank you.